Welcome, everyone, to the Kendall Report, where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, it's 8 o'clock. I'm here again. Appreciate all the participation and stuff. Please tell your friends. I'm going to continue to be here every day. Tomorrow will be the last show for the week just because of Friday's a holiday. So we'll come back on Sunday night. So I made these video Tariff Tantrum 2.0. You can see markets have gapped down on the reopening. We're down 40 handles right now, down 0.74 on the session. I have already run the data sheet, and I appreciate somebody calling out on the data sheet on the NASDAQ last night. And actually on the S&P was a great trade that was on the data sheet, which we'll go through here shortly. And I've changed a couple things. Please give me lots of feedback on these things because they're just going to get better. The best when there's a lot of eyeballs on something to call it out. I don't take offense to things. So if you see something on data sheet, somebody called out that it was talking about the close. Well, I changed that to current price. And the way that well, I'll go into data sheets here in just a few minutes. So we're coming back in. It's interesting, and just a quick high-level view. As I mentioned this, I believe yesterday, maybe in the Substack, they kind of blend together. But you know, that we're having trouble getting over the highs that we printed last Thursday. I know I mentioned that at some point. I think it was in yesterday's stream. And all of a sudden we see these very narrow days. I'm going to show you something. And if you watch the video going back to the beginning of the week last week when we blew up, I drew in the pattern that was going to show up on the market grid. And I'm telling you, if you don't have the indicators, you should get them. KendallReport.com/indicators24, I think will get you there. Indicators should work. But the point is that when you can put predictability into market patterns and things that are likely to happen, I love those big explosions because they always follow the same pattern. And I try to be careful about global labeling. Using the word always is not one I use very often, but I showed you this, and you can go back and fact check that from a few days ago. But what we're looking at here is this pattern, and the reason why I put Tariffs 2.0, we're starting to get some noise. Now the pharma guys are getting a little nervous. Trump is poking around. I guess they've seen some data around that they're looking at pharma, how to put tariffs on the pharma, trying to get folks to make stuff here. I mean, you know, whether you like what's going on or not, it's going on. So I always tell folks, you can hate Trump, like Trump, you can hate what he's doing, not hate, but if you're in the markets, you need to figure out how to deal with it. And that's obviously what I'm always doing here. Whether it's good, bad, or ugly, we deal with it, you know. And I've been around long enough that I've seen a lot of crazy markets. And this one isn't even, last week felt really crazy. But I'll mention just a couple of things as we are. I noticed in today's trading it was very stable, and the order book was filling back up again. Just let me glance over here. It's thinned out, but it's overnight. But we're during the normal market hours today, it was quite stable, and the order book had some pretty decent bid ask on each side on the size. So, but then we opened lower. I'm not sure. Maybe some of you folks. I was looking at some news stuff just to try to figure out what triggered the lower opening. Best I could see is just there's some earnings coming out, but most importantly, I think it's just some of this noise and the tariffs are coming back into play. So if we start to see round two, tariff tantrum number 2, what should we expect from this? And I'll show you when we go through the S&P charts. I'm going to hopefully, we got through a lot of stuff last night, and I keep seeing this. I'm going to hopefully remember to do this, but I may add gold into the Substack at night if I can cover it pretty easily. One of my issues is I do that really late at night, literally at between 1 and 3 a.m. So that newsletter comes out at about between 5 and 6 a.m. New York time or Eastern time. So I stay up a lot. And yeah, it's interesting. You mentioned the crystal ball. It's over at my studio. I'm working out of a home office now because of my personal situation with my wife. But I should bring my old crystal ball over. And just for those, we've got some old timers around. Remember the days of, I have a picture back in the pandemic when I was drinking all the Runa. I found a replacement. It's this guy here, Alive Energy. So if you're a Runa fan, I've been on search. Just got these. Tastes just like Runa. I'm happy again. It's Gaesa tea, so it's a great energy drink. I have to be careful. I'm going to OD on this stuff. I'm like flashing back. So back into, I think as far as the best way to put this, these tariffs were not over. I remember everybody comments on YouTube and on Twitter, we missed a great opportunity. Well, they're trying to give it back, right? So we saw this big spike in volatility. We saw prices change very quickly, mainly because it was all short covering. And now when you're asking somebody, okay, do you think there's going to run? I love the comments when I see them, like somebody, well, we'll be at new highs in 3 weeks. No, we're not. That's not going to happen. There's a lot of challenges that are going to go on. And in fact, I think we have a whole nother leg down after whatever this is we're going through right now. By a leg down, where we could ultimately be, I'm going to say, in the 30% range plus on the downside from the highs. And by the way, and I've said this before, this is not necessarily about tariffs is the reasons. The market's always looking for a reason to go down, in my opinion. We went through 2 years of pumping through, putting money in, the Fed being loose, and then we had the Fed tightening, but they were just pulling some of the liquidity out. Now where we are right now is we're actually dealing with all the crazy, inflating the employment numbers by 800,000, and just every report that probably came out in the last 2 years plus the books have been cooked. We don't even know what's real. I went on after the big adjustment to the employment last year. I went on kind of, at least in Substack, I was going on and on about how we can't trust these numbers. And it was funny. I was talking to an old friend in 1980. I did a presentation, young Bob Kendall, and I was talking about the government reports and what is trustworthy and what's not. And anything that has seasonally adjusted on it is what it should say is seasonally manipulated. And depending on who's running what, we're going to see numbers skewed. Don't think for a second that the people in those bureaucracy and the Trump administration, they don't want to cook the books too. So we're never looking, we're always looking at, if you remember the old Memorex, is this Memorex or is it real? We're always looking at Memorex when it comes to these government reports, and we're always looking in the rearview mirror. So, and when it comes to earnings, which we're going through right now, I think we always have somewhat of an inflated earnings. I think they deflate the expectations about, if you look at almost every earnings report season, 65 to 70% of the companies reporting beat their expectations. Well, the whole expectation thing is BS. And the reason why it is they're understating, so they want to look good. So we always get an earnings bump. Not always, but most of the times we get an earnings bump. So we're coming into that. It'll get a little heavier as we get deeper in, especially as we get into early May. I mean, this kind of goes on for weeks, right? And then we've seen the banks and some stuff coming out, and the reality is that they're always looking to pump, especially around these earnings, and so we'll see what comes out of this. So where do I want to go from here? So tonight, there's not a lot to talk about. We don't have a lot of information other than we've seen a big gap down. We're now down almost 50 handles, down almost 1% at the moment. So I think what we're going to see, and I think the best thing I can do for you folks tonight is to get into the technicals and start looking at some key pivot points, and by pivot points that if we penetrate, that will start to decline. But so we'll get into that. I'm just looking here on my other screen. I want to see if we've got the servers have run and are updated. It looks like they are updated. Let me just check and I'll start with the database. Bear with me one second. Yeah, everything's updated. So let's go ahead. We'll go through the plan for tonight. We'll go through WaveTech database. I think I want to touch on treasuries a little bit. That's going to be important going forward, and just looking at any kind of movements that we might see that might give us a lead into where we're going. And like I said, you folks know this that have been around the channel, is investing for the most part is like driving on an old country road with no moon out and your bright lights on. You're just looking for the next corner. And, we hit a big corner last week, and, a bunch of people drove off the edge because they're too busy looking in the rearview mirror trying to drive. So we'll go from there. So I see Michael talking about Pfizer. So maybe we'll do some. I'll try to get through stuff. Maybe we'll do some individual stocks. We looked a little bit at. I know this truck guy's always pumping wolf speed. Anyway, so let's go ahead and let's go through the database and take a look and see what we got going here. So not a lot. We're at 13.8, so we're getting a little traction to come back in here from the WaveTech database. We're now up to, I'm just rounding these numbers off, about 215 roughly new buys coming in, and there's 65 sell signals. So very, very light, not a lot of, but today was dead. I mean, it was crazy. I mean, it was impossible to even try to trade, and I thought, it was just not enough volatility. Although overnight, and I'll go through the data sheet in a minute, overnight that the London opening, I keep telling everybody, if you're in a time zone where you can get to the London opening and be around, there's always a trade off of that opening. And last night they pumped it right into the sell number on the data sheet that said to go short. The overnight sleep trade, put it on, let it roll, took profits while, put it in there. So let's go ahead. Not much here. We did get a new buy, consumer non-cyclical. One day it's down 1.3. I don't think we're going to get a lot of sector rotation here. We'll see. We're at 13%. The metrics on the database, we got to get over 22. These are not symbols that are above some simple 200-day moving average or something like this. These are symbols that are being recognized having actual trending characteristics and probability. So there's a big probability mapping on our models that are telling us that things are likely to appreciate, or the probabilities are higher for that. So there's 1,939 of those symbols out there, and at the moment. So let's go ahead and let's move on and go over to the S&P. But I want you to, those of you who've been watching every day and are regulars, You remember last week when we got this big spike up, I drew in the market grid. I said the market grid's going to collapse, volatility will collapse, and we'll come back down. Once volatility collapses and gets to the point where we are right now, this is where we'll be able to determine the next movement down. Now, the algos down here, and I talked about this last night, they're showing that we're going to get a big bump up. Sometimes, I think we're at a very critical point. Right now, and I'll show you the sheets, all of the data sheets that I'm putting out that I've worked on developing, that I put into the Substack every night. All of those data sheets are still, or not all, I don't know all of them, but the S&P is actually pointing another, I think, 75% bearish downside for tomorrow. And the reason for that is the trends are down, even though we're trading above the 10-day moving average. And this is my issue with the amateur day of anybody talking about symbols that are above or above the 200-day, and all of a sudden they're good just because of that. They're not. This is a good example of we're trading above the 10-period moving average, but the 10-period moving average is still sloping down. So that acts best way to put it is almost like a magnet for prices to get there or get back below and get back into trend. So what we saw for, let's go back to last Wednesday's big event. So we've had 3 days that have managed just to hang above that declining 10. And the good news is, let me look at this value here. The good news is that the algo says that the 10 is going to lose that downward momentum, but we still have, and I'll go through the details here, we still have downward Fibonacci targets in this pattern that are suggesting there is a reasonable probability. I'm going to show you the data sheets that run the probabilities. These data sheets are, somebody made a comment, I think it was in the stream here, but also on YouTube. These things are becoming very viable if you're watching these. And so let's take a quick glance over to that at the moment. And let me do something. Let me publish this so I can get it on the big screen here. And that way we'll get a much better view. Okay. So 70% bearish. Notice here where it used to say close, it is now current. This is when I took the snapshot. It was right before we went live. It was at 54.31. We're now at 53. I'm sorry. Current was 54.19. We're now 53.77 on last trade. But let's take a look at this. It's got a 7 of 10 score on the trend to the downside right now. It's still got us in consolidation mode, which I think that's the case. I'll go through the technicals, break it down a little bit more. There is a divergence, but here's the numbers that I was about to reference. This is the downward. There's still a 45% probability of printing 5180. There's only a 35% probability of 4925 and 4773 is we're 50% toward that major decline right now. But if we look at the PPMs in these red boxes here, we're in trend mode across the board here. And it's targeting 54.87 right now. That's going to be pretty tough to get to R1. If I go back up the top of the sheet, R1, S1 is the projection. So S1 is what we're going to have to look at, 53.77. So we are trading at S1. If we look at this is a long entry on the trading opportunities, suggesting long entry right here, and target 54.87. I have not adjusted this because it's right now said it's buying against like the S1 probability, and it's trying to sell R1. That's a pretty big order. Maybe it comes into play. But I'm working on on these trade recommendations of trying to get some incremental trades. Those of you that ever were in my live trading room I usually have this 3 exit routine that you do. I'm going to try to build that into here. I just don't know if there's enough space, but we'll see what comes out. But I just kind of want to go through. So remember, it's for entertainment purposes only. I always love that. But here's where we got resistance levels over here on the sheet. But definitely I'm highlighting this area right here. This is worth taking a read because it basically breaks down. As I've told you, I've trained this thing through the prompt that develops this to think and look at the PPMs as I look at them. So there's a lot to be learned just from reading through this area here. You could probably take this and drop it into Claude and tell it to write commentary around these numbers, and I'm sure it might be able to write a script out for you to follow that. I've been thinking about putting it in this blank area that's over here, but anyway. So let's go back to the charts. So here's going to be the key. We've seen the collapse of the volatility. This is going to be the same pattern when I bring up NASDAQ, okay? They're very similar. NASDAQ has a little higher alpha and beta from the standpoint of the volatility movement. But all of these patterns look the same. The forecast is on the PPM1 is that the upside is going to start to flatten out. So this is going to be the key level, and it's exceptionally important because I always go for these clustered numbers when you're looking at you're doing the analysis here. What I want to show you is if I go down to the market grid, 52.95 is the extreme. So that's quite a ways from where we are right now. But if we look at the 10-period moving average, is 53.08. So that's going to be your support level from 53. This is extreme support, 53.08 to, let me get that number, to 52.95. So that would be the ultimate buying location. If we break through that, though, then we start to get into Fibonacci projections and that this whole pattern is going to roll over. And we're exactly at the point I told you last week we would be at. And I even told you it would be Tuesday or Wednesday of next week by the time this would happen. So what we've seen is a big spike. We saw the next day where we printed a slightly higher high, and then basically then we had an inside day, and then these really low volatility days on a relative basis. And this is the stabilization. We haven't had any new noise from the administration. We haven't had anything to trigger, but now we're starting to get to that point, right? So this is where the rubber meets the road, and we're going to find out which direction we're going. If we look at the PPMs down below here, let me draw in a couple things. I'm going to stay on this thread just for a minute because this is going to apply to the NASDAQ as well. I'll do a quick review just to confirm that that's the case. But let's take a look at this real quick. So this is the thing I want you to look at. I usually put boxes on the Substack, but if we look at these, where I just put these boxes, what happens is these indicators are flat, which means they're maintaining, and they're all negative, and they're all in trend mode down. So that tells you that the rejection point is going to be, if there was a rally, it's within the means of volatility right now based on the market grid, and I'll try to make sure I explain that properly. But within the market grid, we should stay within that range, within that narrowing volatility that you see right here. But what these are telling us is that the rejection at the 21, which is 56.19, it's a bit higher than we've been since even going. We'd have to make a new high, but even if we made a new high off of last week, which I can't, when the screen gets frozen when I'm on this mode, I can't get the exact numbers, but I believe it was 55.28 was the high. We'll see how my memory's working. But at 55.28, we can still make a new high on that pattern. And you think it's breaking out, it's going to reject probably off of that 21. So we're going to, if you get up there, the range today, if we look at it at the extremes, 55, which is very close to that 50, just above that 55.19. This is the market grid range, and then 52.95. So that's your maximum extreme ranges for today. If this thing gets out of control and there's noise coming out of the White House or something happens, we could break. I think there's some vulnerability to the downside, but I think most likely these extremes that we're seeing in the market grid will hold for at least another day. As we come into the long weekend, though, there's going to be other considerations. Tomorrow we'll get, some employment news. We'll get claims and continuing claims, that kind of stuff. But there's be some more earnings that'll come out before the market open tomorrow. Maybe there's a chance to move this down below there. But right now, that contracted range, like I said, is, 52, let's just call it round up 50, 53 to 55. So you're looking at a 250 point range, and that's normalizing from the crazy range. The whole thing got reset when we did that big day on Wednesday, where we had, 11.5% move or something ridiculous. And I told you then it wasn't going to follow through. And so, we're a long ways from getting this thing, and we're still on a daily chart. So I think I went through some weekly stuff last night. And so let me just look here. Yeah. Okay, so let's go ahead and clean this up. Let's move on, and my goal is, where we at here? 30 minutes through. So let's see if I can get through. Let's bring up the NASDAQ here. NASDAQ futures. Same pattern, a little broader range, but if you look at the indicators here, they look exactly the same. The same formation. The only difference here, I did notice this the other day, and I was talking about it, is this one down here where my cursor is, the PPM3 is a little bit more of upward slope, but even when I look at the values of this slope, it doesn't get positive. So the rejection point's still to 21. You can see this is interesting. Let me just blow this up so we can zero in on this. So on the big reversal day, back last Wednesday, we hit right at the 21, and we stayed right there. Next day, we printed up there again, rejected. We got another move here on Monday, rejected off of that level. We got another move yesterday. That was today, actually. On Tuesday was a bit of a rejection off there, and now we're getting some follow through to the downside, where we've taken out the low of the last couple of sessions. So all that's telling us is that we're probably going down to the 10. If you notice, the market grid here is 18,384. Okay, and if, that's the market grid level. And if we look at the 10 period moving average, that's at 18,418. So 418 to 384 is going to be kind of that support range. My guess is you could bounce off of there if we get down there. Since there's no way to get on the fact sheet, I don't think there's any way to get to the preferred trade, which would be to short at a higher level. That's not going to happen. But there's probably going to be the inverse trade off of around these lows, somewhere between S3 and extreme, depending on what kind of action we get tomorrow will put us, and that's going to be your trade off of the lows tomorrow. But you got to be keep it tight, because if we break through this level, it should reverse substantially. I don't think so, though. I think there's a pretty high probability of holding that level. I haven't run the sheets on the NASDAQ yet. So, yeah, so I see trucks. I look for individual stocks. That's why you want WaveTech. We follow 14,000 of them, 14,700. And that's the place you can buy it. None of these things are turning yet. So there's nothing to do here yet, folks. I told you a week ago, nothing to do here. Not that there's not some trades. I'm talking about positioning in some of these things. It's still a very cautious market. If we break down through some of these levels, what will happen, let's draw in on the NASDAQ. Let me draw in the next possible scenario. Okay? If you went back and watched last Thursday's, you would see that what I mapped out was exactly right. So let's take one more look here. So what? Let me make this just a bit thicker. Yeah. So what we're likely to get here, if the market grid turns down and starts to do this, then we could get a channel that forms down and ultimately come down and test some of these Fibonacci numbers that are down here. That's the danger of this pattern. And the reason why I was telling everybody, hey, we're not there yet. There's a lot of work to do. This is a daily chart. You go to weekly, there's even more work. The probabilities of making an all-time new high are probably 20% right now or less, maybe 10, in this window that we're in right now. It will take months for this thing to work out. And I know since I've been live every day for the last, I think this is number 6 or 7, I think what you can expect out of this is that there is more. We need to retest that. Very seldom do we get this kind of spike low and it doesn't retest. Even if the retest is 0.38, 0.5, 0.6% retracement of this value, that's a very high likability, a probability, and this will push us down toward these levels here from the standpoint of what's likely to happen. So let me clean this up and so you. Yeah, so what I'm talking about here is we got this move up. We got a little move. Maybe we're getting like an ABC failure, and then you get another ABC, and then ultimately you end up retesting the low, or you go down. And as one of the things, if you get my Substack, kendallreport.substack.com, $8 a month. I think there's 7-day trial, and you get it for a year for $80. But I will be watching this type of pattern, looking for anything that could indicate that this is going to be the next leg down. Okay. Since I mentioned it, let's just go a little bit further. We'll see how I'm doing on time. Yeah. So let's just go here one more step, and let's go over to a weekly, and this is going to be the S&P and the NASDAQ are going to be similar type patterns. So I'll leave it with no indicators right now, just looking at market structure. I talk about market structure a lot. This is not a pretty chart. This is not a chart that's going to new highs in the next couple of weeks. It would take at least 4 to 6 weeks to set up the pattern to even think about it. So let's bring the drawing tool back up, and so we can take a look at all of this. But so this break that we had here, we went right to the fib targets. And now what we're seeing is we're bouncing back and toward the 10-week moving average. I don't have the indicators up, but these are substantial downturn. Typically, you get a rejection off. The thing that you can hope for if you're a bull longer term is that we come back toward this Fibonacci Let me clean this up so I get clean marks here. 1 second. So what we would hope for, we get this down, we get, you want to get to this level, which we've kind of retested, and you want to set up a right shoulder right here, and then that would be your 50%, 0.382, 0.618. It could go a little deeper. If it goes below, this is Bob's rule, and it's a GAN price, but if you go below a 66% retracement of value, it retests a low or makes a new low. So the test will be what those numbers are. I'll try to put that out from the standpoint. But so what we would hope for, if you're bullish, is that you would get a pattern here where it holds this retracement value. And the issue with retracement values, they're kind of in nowhere land. And you just hope that buyers show back up. And then you would come back into this moving average configuration, and what's projected is still the 21. This is weekly chart now, where the 21 week is going to continue to be that rejection point. Just simple moving averages. You don't have to do the weighted and do all that stuff. I don't think. I've been doing simple averages for decades. They're fine. You just need to understand what their values are and all that. So let's just kind of go from here. Let's bring back the indicators here. This is the big issue. When we bring up the indicators, we did get a bit of a V bottom, which is interesting. We still have a rising but gradually failing 200-week moving average. This probably needs to be retested, and we probably need to move over until mid-May or something before we even have a chance at getting out of here. So between the analysis I just did on the S&P, carrying that over patterns into the daily NASDAQ and the weekly, they're all very similar patterns. Let me just flash up the S&P weekly just so you can see it. You can see it, they're all the same pattern, all the indicators, everything. And the indicators right now on PPM1 is a minus 0.17. I'm going back to the NAS here. And on NAS, they're 1.14. Right now, the probability factor of going above, I haven't shown you guys the probability map for a while, but the probability of getting above a moving average that is declining at this percentage level is about 10%. So if you got to the 10-period moving average, which is weekly, 19,896, you'd want to dump the truck there, not back it up and buy, but sell everything you could find, because you're going to get a rejection off of that price. And then that'll be a trade. But if we aren't able to get through last week's high and we start a decline here, that's going to tell us a lot about the character of the markets and what we're likely to expect. So good news is I'll be here tomorrow. We'll be able to close out the week and talk about how things are setting up. For you WaveTech users, you'll be getting all the Monday's run will come out tomorrow night. So we'll run the models on Thursday night instead of normally Friday, the last day of the week. Okay, so let's see where we are. 42, we got 15 minutes roughly. Let me go through, let's do, I want to bring up the treasuries. Let's stay with weekly. So Treasury's got that spike. I put out that number for everybody to watch, which is 4.72 on yield. We backed off of there. We come back into the moving averages. The averages are still declining. We're looking at the 40 being probably the floor here, and that's going to put us at the, just get the 422. We'll call it 420 on this. So this is a good sign, actually. We do not want it to get over 472 because then we're going to push some of these upward fib targets and nothing good is going to be happening. So we'll see how this plays out as we go through the next, actually, couple weeks. Looks like we've kind of got a ceiling now. We spiked above it, but the 10 period moving average at 440. So we're going to call 420, 440 on the 10 year. So, yeah, I kind of want to just get through. Let's do Bitcoin, and then I'll have a few minutes here, maybe 10 minutes or so, and we can go through NVIDIA. We can go through some stocks maybe at the end of this stream tonight. We'll kind of mix it up a little bit. But so as we look at Bitcoin, Bitcoin's right up. This is amazing that sometimes I don't use trend lines. I use moving average instead of trend lines. But this, if you went back, Substack back to March, early March, what I was talking about is that we're going to ride above. In this case, I have a weekly, so it'd be the 200-day and the 40-week are very similar numbers. But the slope of this pattern, I said we're going to trade between the 200-day and I believe it was the 21. We'll look at it here in a minute. But in this case, you can see it stayed within this wedge formation. And if you just figure this thing out, I keep telling folks, too many people trying to make things too complicated. But if we just go here, and this is a 10-week, and this is a 40. Back in March, I said we should trade in this wedge here. And you can see we rejected off the 10. We've stayed there. I'll show you the indicators. We're at a point where this next level, so you'll get these almost like waves where, okay, if we break through that 10 resistance, then we're going to go up let me clean this up so you can see this. But the algos are suggesting we're going to stay within that range as well, right? So we're seeing this little zigzag being promoted by the algos on a one-day close. So it's showing us where we're likely to flow in here. So my expectation is that we will get to this next level up here. I'll get some prices for you in a minute, but we probably come up here and then we continue to hover along this upward slope line, and you're just going to consolidate until the point, I'm going to go mid-June, just rough numbers here. When we get over to somewhere late May, early June, we're going to be in a place to make a directional change at that point in time. So let me pull this off. Let's go to the algos and just see what they're doing. I'll bring up the daily, and then we'll do a couple stocks here real quick. I'll have about 12, 15 minutes. Yeah, so you look at the algo, they're actually projecting just that. They're showing increase in momentum. The PPM1 is going to cross its first derivative, looks like the week of next week, April 26th. And then once we get above that, we should start to flow up to this 21 period moving average, which is right now at 90,758. But it is dropping about $300 to $500 per week. So that value up here should be the next resistance point, and we still have the support at that rising 40 week. So let's put this on daily. I'll show you how this pattern lays out on the daily. So one of the things that yeah, so I'm just trying to find the 200. So we're trading under the 200. We're trading closer to the 40. So the 40-week average is coming through sort of kind of through here. And so We do have upward fib targets right now. I know I put that in last night's Substack. 84,300, 90,900, and 93,700 is where these fib targets are coming in. And that puts us right at that 21-week moving average. So I guess not mean to do that. Okay. So we can put up, we'll do a quick look at gold. Gold continues to run. It almost looks like the S&P, doesn't it? We've got this burst here coming. We're trading overnight right now. We're trading right at the RTX level. Let's do something, folks. Let's do something for fun. I've not run this before, but let's do it. I'm going to go over and I'm going to run a fact sheet for gold. Let me just make sure it starts. And once it does, we'll come back to this in a minute. But let's take a look and see what it's telling us about this. Could be interesting. Bear with me one second. I just want to see the code start to run. Like I said, I'm working on this this sheet so that, okay, there it goes. So that you can run this on any market, any stock, anything. So gold is trading up around 32.96. The high is 32.88. So we're right at the RXT level. We still have some acceleration, even though these are flattening off. They're all in trend mode across the board. So we'll see what that fact sheet comes up with there. And I'll publish it so it'll be big enough so you can see on the screen. Let's take a look at weekly. We actually got an RTX sell signal on the weekly, and we've got, actually we have a big pivot coming up. Hang on, I want to look at something. I don't think it's, yeah, so we have a Fibonacci target on the weekly 33.46. I've talked about that in the past, so we're definitely looking at the for that potential. Let me reset some things here. Here we go. And I've been talking about this. We still have this upward slope, and if I bring this up, you can see, look at the vertical projection. All these dots are forward-looking expectations on our WTAR indicator. This is what the trend looks like. I mean, this thing is vertical, and you can see it's staying. This is 2026 I'm looking at. This is March of 2026. Will it happen? I don't know, but the moving averages are forecasting out, and we also have 3 fib targets. We're getting close to one, 34.86, 36.84, and 38.44 is this high at the very top of this. Bring this down right here. This is the high Fibonacci. Moving, everything says this thing is going, just going to keep going. So gold I thought was going to stall. We look back, but we're looking at all the indicators. We're still in trend mode. Everything's going on. Let's just see if we got a number here. Okay, well, perfect timing. Okay, hang on. Okay, so this is the fact sheet on gold. Let's see if it's, look at all this green. This is what I was talking about. This is all trend mode. Whenever, here's the, on the fact sheet, we get plus T's across the board, except for the 200 is in what's called maintenance mode. It's above 0.15, but that's a 200 period moving average above 0.15 is a screamer. We look at the probability here. So 3284.60, I believe that's about where we're trading right now, was the projection had a 65% probability. We've got RXT is 3296, and so 3327 is high target 1. This is support and resistance. I actually mixed in the fib targets up there as well into that mix, which is pretty brilliant. I haven't seen that happen on these spreadsheets. So once again, there's a prompt and a code that I put together that looks at all the data, and it's been told how to think. And that's interesting that in the market grid, it actually threw a high target in there with the probability. So right now, 3327 has a 55% probability of being reached. So that's pretty robust. On a downside, 3271. This is a daily mode. There's a short entry, 3296. Highest probability entry is 3270. Target 3328. So it's targeting up at that high target. So anyway, I thought I'd run that for you folks just so we can see that. So let's put NVIDIA up. So weekly NVIDIA, as you would expect, there's a lot of resistance right at this level right here. You'll see this downward slope here on the 10. It's trying to stabilize here. We get that big spike. This is a weekly. Let's go to daily real quick. Yeah, so daily's in that contraction. So we still have a number of days. The 40-day moving average 10-week is going to be the key resistance point here. We look at what's being projected, some increase in potential upside momentum. And we're having so much fun with the data sheets. I'm going to run a data sheet for, I'll run a data sheet. While we're talking, we'll come back to it. So we're going to run a daily data sheet on NVIDIA. Now this is going to be on the problem with doing it on stocks in a market that's not live. We need to make this sheet work perfect. We need the first print tomorrow to be able to have live data so we can update. So at least you'll get an idea of what this thing is saying from here. Yeah, it's funny. Meet Kevin. I keep trying to get a hold of Kevin. I did a interview with him almost 2 years ago now. I think it was 23. Actually, it was 2 years ago this month. I was on my way to Singapore. But yeah, so I would like to, yeah, I know. But I'm trying to get him, for him and I to do an update, but he hasn't been doing many of those types of interviews. But you got to give it, the guy's got his own private jet, so he's doing well. He's done well. Okay. Oh, it helps if I hit enter. Okay, so where are we at? We got only 2 minutes, so this is going to be our final run here. Yeah, I mean, Actually, when I did the interview, it's out there. You can go to meet. You can put Bob Kendall meet Kevin. You can watch that interview. I didn't know I was doing an interview. He didn't tell me. He goes, "Well, why don't you come over? We'll hang out." And I said, "Well, I was catching an airplane at I think at 6 p.m. on my way to Singapore." And I said, "Oh, we can, get together at 1 o'clock or something." Ends up I walk into a complete studio. It was kind of in a house that some guys owned, and it was multiple. All the bedrooms were studios. It was interesting. It's in North Hollywood. But anyway, I don't know why. I still didn't hit it. Oh boy, I just blew up. That really makes me mad because I just paid for $100 a month for Claude. They're telling me that I made a mistake of not doing another thread, so they're telling me that I have met the window. Let's see when they're going. Yeah, I'm not sure what happened. So anyway, we'll go back to the screen, and that didn't work out. It did too. If you do too many threads on one, too many iterations of that thing, it's a very big script. There's I forget how many words. I think there's 1,700 characters in that script that I put together that I built. It's been in development for another one. So unfortunately, I'm not going to be able to show you the NVIDIA sheet. Apologize for that. You got to blame Claude and Anthropic for that one. So anyway, I guess we'll kind of call it right here. So just to summarize, a reason why I called this video, taper, or not taper tantrum, but tariff tantrum 2.0, is I think we're about to get slammed with some new thoughts on this thing. Whether it will decline a lot, we're still down 49 handles on the S&P right now. So we're seeing a bit of a negative reaction. There's a bunch of stuff going on about the pharmaceuticals and all that. Yeah, listen, we probably, Joe Taylor, I see, Palantir. I saw one of the funniest memes ever is I think the stock was declining or something when it got hit a number of weeks ago, and somebody was going, put a meme out like we're trying to, had some kind of graphic with it and said we're trying to figure out what these people actually do. So that's always funny on that. Yeah, just looking at a couple of comments here, but yeah, unfortunately, I blew that up. That's why I kept hitting go and it wouldn't go. So anyway, that's that. So yeah, just to summarize, I think we have some risk coming back into markets here I believe Wednesday, and as we come into Thursday and the long weekend, people are going to have to think about what they're doing, especially the shorter term traders and what happens. So we do have some sentiment risk that come in here, whether it can break down or not, if it holds some of these numbers I went through, but those are pretty solid numbers for tomorrow. I think we'll see what we come up with tomorrow night with what's going on. So I appreciate everybody watching. The link to the video tutorial doesn't work for me. Yeah, so go to the YouTube channel and hang on one second here. So let's do this. For those of you have it, or if you want to see what it's about. Just trying to get to the channel. 1 second here. All right, I'm going to bring this up. So if you're looking for some of these tutorials, if you go to the YouTube channel and you come down here I believe it is. There should be a. Let me just look here and see if I can see it here. It's not there. There should be a playlist. Bear with me one second here. Playlist. Click on playlist on the top, and then this first video, play all, is indicator review and how to use. So try that. That should work for you. If I click on that, this is the indicator masterclass. That is the one that there's a broken link in some of our stuff. So anyway, go there. That will get you there, and send me an email. People have been saying the email bounces, but I get lots of emails there. So I'm not sure. I'm trying to find out why info@Kendall report is bouncing. If that happens, I'm not sure why, because I get emails and send both ways, but I don't know if it's an international thing. I'm not sure what it is. So, go to the channel. You should be able to find those videos. There's actually a lot of information if you go through the different things. There's a couple seminars I did on indicators. There's a lot of stuff there and all that. So, folks, running over just a few minutes, but make sure that you hit the like button, please, before you leave. It does matter. And subscribe. I've actually been picking up a fair amount of subscribers since I've been live, so make sure you do that. And I know a lot of folks, you might have to log in to hit the like button. If you're not logged in, it won't let you hit the like. So I realize that a lot of people watch YouTube, and some of them don't even have an account. So I get how it works. Anyway, thanks for spending the time with me, and good luck trading tomorrow. We'll see you tomorrow night, same time. See you then.